Yo, what's good everybody? Welcome back to the final video inside of part 8 covering all things price action. Now, in the previous video, we discussed other tools, and inside of that, we discussed, the Fibonacci retracement. So I know what you guys are thinking. It's a very fancy name. It's got cool colors, and it looks like the Holy Grail. Maybe you've done a little bit of research, and it's like, holy shit, this thing's awesome. So what I'm going to do today is I'm going to make another video on Fibonacci retracement, kind of giving more of an in-depth approach to it, and then how to use that to determine target levels. Now, I do not claim to be an expert. I don't claim to know everything about markets. I'm sure there are people out there who can use the Fib tool much better than I can. So all I'm going to be doing is showing you how I use the Fib tool and how it helped me become profitable. Now, once again, I don't even use the Fib tool anymore, okay? So I'm not going to sit here and claim that I'm the best at it, because that's just not true. All I'm going to be doing is showing you the, what I know about the Fib tool and how I use it to become profitable. So by now we know that the Fibonacci retracement tool, all it is a way of measuring pullbacks. Okay, so we know inside of bullish structure we have higher highs and higher lows, and inside of that we have extensions and pullbacks. Okay, and in bear structure we have lower lows, lower highs, and inside of that we have extensions and pullbacks. All the Fibonacci retracement tool is, it's a fancy way of saying, hey, I'm measuring this pullback. Okay, that's all it is. It's nothing more, nothing less. It's not a tool created by Jesus of Nazareth. It's nothing like that, okay? All you're going to be doing is drawing it from the higher low to the higher high, okay? And all it is doing is measuring the pullback of this extension. We have this extension here, and it's measuring this pullback, okay? So, and now we know that, the key levels we have are the 50% retracement and the 61% retracement level. So using the Fib tool, we know that all it is another way of adding confluence to a trade. It's nothing more, nothing less. I will never take a trade just based off of Fibonacci level. Oh, it's a 50% retracement. Who gives a shit, right? All that is a way of, it's just a measurement. It's another tool. It's the same thing as a support and resistance line, all that other stuff, right? So we know that we need to have multiple confluences. Now in this example we do, because we have a bullish trend, we have a pullback to level of market structure of support and resistance. What used to be resistance is turning to support. Maybe we have a bullish engulfing come in. We have multiple confluences, not to mention we're at a 50% retracement on the Fib level. So this would be a valid trade, yes. But once again, guys, I'm not just taking trades based off of Fib levels. Like let's say we have, I don't know, something like this. Hopefully this is a Fib level. I got a good feeling it is. Okay, so let's say we have something like this. We have the low to the high. Okay, and yes, so right now we have three confluences, or two, maybe three. So we have two confluences, one being a bullish trend, and we have another one which is a pull back to a 50% retracement level, and then maybe we have a candlestick confirmation like a bullish engulfing. I'm still not taking this trade. Okay, why? Because we only have three confluences, and you guys know me, I need at least 4 to enter a trade. Okay, we don't have 4 confluences. Now, like I said in the previous example, maybe we have, a pullback to a major level of support and resistance, key level, all that other stuff. Now we have more confluences, right? But I'm not taking trades just based off of Fib levels. I'm just not going to do it. So that's how you use the Fib level, Fib retracement in bullish structure, bearish structure. It's the same thing but flipped. So we know we're creating lower highs and lower lows. So you're going to take it from the lower high, drag it down to the lower low, and all it's doing is measuring the retracement of that extension. So we have the extension, the pullback or retracement, whatever you want to call it, and now we know that it pulled back to, this level of market structure, and it also happens to be the 61.8% level. We have multiple confluences, we have a downtrend, maybe we have a bearish engulfing. Sure, take it. Valid entries, right? Now with that, that is how you take entries. So now let's say we have something like this. We have a bullish structure, higher highs and higher lows. Okay. So now let's say we have, drawn our Fib level from the low to the high. Okay, and we're waiting on a pullback. We also notice that, hey, it lines up at a 50% retracement level, right at this market structure, which also was previous resistance, now hoping to hold as support. So now we're just patiently waiting, right, for this pullback. Just like we do any other time in bullish structure, we have this extension. We wait for the pullback to get a discount for a better entry, okay? So then price starts to pull back, and then we get a bullish engulfing at this level. Yes, we know that we have multiple confluences. We have bullish structure. We have a break and retest market pattern. We have pullbacks and rejections off of market structure. Not only that, we have support and resistance. We have a 50% fib retracement. Now we have a bullish engulfing. We have multiple confluences telling us, hey, dumbass, get in this trade, right? So let's say we go ahead and we take a buy here. Where are we looking? Where are we looking to take this trade to? Okay, so we know we're buying in right here. Now it's going to be probably like that after the bullish engulfing. We know our stops need to be in an area that if they get hit, it invalidates the trade. So I'm going to put it under that level of market structure. Okay. Now where are we targeting? Okay, where can we be looking to get out of this trade? First place is right here at the previous high. Okay, but we know that in market structure, in bullish structure, if we're getting higher highs and higher lows, and we're taking a trade at a higher low, what do we think is going to happen next? We can anticipate with a probabilistic outcome or a probabilistic outlook on this setup that there's a really good chance that the market goes on and creates new highs, right? It breaks through this retracement level or this resistance level and goes on and creates new highs, because that's what price does in bullish structure. So yes, we can be targeting the previous highs, but one thing we can also use is they're called Fibonacci extension levels. So we have right now on our charts, we have the 27 extension and then the 61.8 extension. So these are just more levels that we can maybe take trades and ride them out too. So obviously I would target the high first, and then if it hits there, then maybe you move it to the 27. If it hits that, then you can go to the 61.8, or maybe just the next level of daily support and resistance, whatever. But that is just ways that you can use the fibs to identify levels of pullbacks and key levels, and then also using extensions. So what I have here is a couple examples drawn up inside of a bullish trend on actual market candlestick patterns or candlestick price action. So we obviously, anybody with half a brain can look at this and be like, it's bullish structure. We're getting higher highs and higher lows. If you want, I guess I can draw it with the path tool. Pullback. Okay, so we're getting that. Okay, everybody can look at this and be like, yep, it's bullish. All right. So inside of this bullish structure, we know that there's going to be extensions, boom, and pullbacks. So we're going to take our fib tool. We're going to take our fib tool, and we're going to draw it from the low to the high. Boom. And now we see that we had a 50% retracement onto a key level of support and resistance, market structure, and then we had a bullish engulfing print. If you scale down to lower time frames, maybe you get a better entry. There's multiple ways of taking these types of trades. And then once again, let's say you did get in this entry. Let's say you went down, scaled into a different time frame, and you got a good entry. Let's say you're in here, or maybe, we'll just go like right here. Okay, stops go below that level of structure, because if it breaks that, then we no longer want to be in that trade anyways. And then we're just targeting either the previous highs, okay, or we can target these next extension levels. We can maybe anticipate price to go to the 27 extension or the 61.8 extension. And then also, like I said, you're not using just the fibs. Maybe you would use this level of market structure over here. Boom, draw that across, and then you're targeting, the 27, also knowing that it can go to this level of structure. Okay, so you're not just using fibs. Fibs aren't, like I said, fibs aren't the holy grail. It's not like Jesus of Nazareth, created it. So it's literally just a tool of measuring, pullbacks and extensions. So once again, price creates a higher low, goes on and creates a higher high. We grab our fib tool, we go from the low to the high, and we patiently wait for this pullback. Once the price enters this 50% retracement, we scale down to a time frame, and get a better entry. Once again, we have multiple confluences. We have a bullish trend, we have a break and retest pattern, we have maybe a bullish engulfing candlestick, maybe on lower time frames. Not to mention we have a pullback to a 50% retracement level. So many different confluences are telling us, hey, dumbass, let's get in this trade. Okay, so let's say we listen to our brain, or we listen to logic, we get in, stops go below the structure level. And where do we target? We're simply targeting the previous highs, okay? Or we can target these extension levels, 27 or 61.8. Now I would go, I would zoom out and kind of go over and look at, these previous structure levels. So now, looking to the left, we have a structure level here. We have a structure level probably here. And then obviously up in here is a daily level. So we're just riding these levels. So it just falls perfectly at this structure level over to the left, falls almost perfectly on this 27 extension. So we're just going to write it to this 27 extension. And as you can see, it did just that. Okay. Once again, Fibonacci retracement is not the holy grail. Okay. It is not going to win you every single trade. You are going to still lose trades, right? Just based off of, the fact that, hey, market movement is random. We know this. Trades will go against you. We know this. And it's no better than any other, technical tools that you have in your tool belt, such as, support and resistance, market structure, candlestick patterns, market patterns, all that stuff, right? We know with all that stuff, we're still going to take losses. But if you add all these up together and you have multiple confluences going for you in the direction that you want to take the trend, you have a high probability of making profit over, a given number of trades, right? So that is it for Fibonacci retracement and Fibonacci extension levels. I hope you learned something from this video. And like I said, guys, if you're really interested on how to use this, go to TradingView, open up a chart and just practice, right? Just go through and just do what I just did. Draw levels of market structure and then measure fibs. Wait for pullbacks, scale down to lower time frames, look for entry patterns, right? You just got to practice. That's the only way you're going to get better. With that being said, guys, that is it for all of part 8 covering all things price action, and I will see you guys in the next section. Peace.